flashy tie that I love so much. All right, Todd, let's talk about this. Corn and beans are going opposite directions this morning, kind of. But you were saying earlier when we spoke that there really isn't much to drive the market today.
I told you earlier, buy them, buy them, buy them. Not, we had. It's funny because we had a little bit of a pop since we last talked. But
yeah.
This is, you say the year's over on Thursday, short week. The week's already over. Again, unless there's a crisis, there's not going to be much reason to move these markets. You talked about the dollar, but now remember the dollar is actually lower than it was 10 days ago.
Yep.
It's higher than today, but we've got a basic economic mess. We've got a lot of unintended consequences that have been created by the Federal Reserve, by all the financial engineering, which is creating havoc for everybody. But all that being said, this time of year, you've got skeleton crews. Everybody knows that there's not much action going on. There's not much trade. And all that's going to happen if you see a move big one way or the other, if you're a trader, you want to kind of fade that move because usually that means that one big order came in that pushed the market around. But overall, from any perspective you want to look at, there's nothing going on. The markets are drifting. The S&P is 1% higher. Everything else is kind of flat. And I think you can expect that action the rest of the week without fail, unless there's some major crisis that we have no idea what could be in the next couple of days.
Well, of course, the thin volume always leads to exaggerated moves in the markets, and that's very true this week. Now, if you have a farmer out there, or a producer that has corn, soybeans, or wheat that they have to sell before the end of the year for tax reasons, would you recommend they re-own that on paper?
If I had somebody who had to be in that position, I would teach them how to do what we call the box and sell it without selling it, because there's a way to do that through the option market, that you can actually sell it, not give up any of the potential profit, and lock in the price here and take your tax loss or whatever you want to do here. So there's a way to do it. I would not go into the open market, certainly now, because if it's got any size, the market's going to start to take it and push it down. So it makes it much more challenging if you need to go in the open market when we have no business right now. So there is a way to do it called creating the box, and you can actually create that synthetic short without actually getting out.
So that's why folks need to keep in touch with their market advisor, such as yourself, if they don't have one. I want to take a quick peek here at the wheat and cotton before we head into the break, Todd, and then I'll talk with you about the cattle trade in a little bit. March wheat in Chicago currently up 8. How about that? 474.5. Still about 2 cents off of its high, though. And Kansas City wheat on March, we're trading about 6 higher. And in the Minneapolis spring wheat trade, we have March there 5 1/4 higher at 497. Hey, it did touch above $5 though. And in the cotton, we have the March contract there down 7 points at 63.90. We'll pause for a break and talk a little livestock, and we come back with Todd Horwitz right after this.